I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CT Review. Today is November 7th, Friday, 2025. Hope you had a good day and a good week. And yo, you gotta listen to yesterday's video. I told y'all about this. I told y'all about coming. Do they want to grab these guys down here? And then we're going to create the range of the week. I put it in the community post tab yesterday saying that I don't expect Thursday to be the low, even though I drew the range of the week from here to come back into 20 to 40% of the weekly range. At this point, first of all, this was most likely resistance, and I talked about maybe coming in here. That's to say if this was to hold this imbalance that I was talking about, and if Thursday was surprisingly the low and Asia, London, just pushed it up or some shit, right? And I said very clear that's not going to be probably the case because Friday, it's heavy and Friday's going to make the low. So where are we going to go? We're going to tag the 22nd and the 23rd lows. Very fucking specific that I talked about that, just so we know. And then now I have the weekly range put out. It's not being used yet. Look how I fucking tackle this. Look how that in 4-hour imbalance, we obviously come underneath it. If I was to drag it, it's there already pre 9:30. That was lower high, lower low, lower high, and it just was going to sink down. It's going to generally come down when it's in this type of nature. I have the fib here. You have 61 there, but they're not looking at the 61. They're looking at that liquidity. So that's the 70. Look what I got here on the fucking screen, bro. This is just fire. The only thing I'm missing in the career is major size, like the homie on the internet that did over $1 million. Cool. And he's a kid too. No problem. I'm in no rush. But the point of what I'm doing and what I'm sharing is you can see at 9:30 we push down. We have that first imbalance. Why is that the first imbalance? Because it's lower than all of this session and yesterday. So you're going to use that. No problem. Take a look. You can also use this second one, which I have highlighted in this bearish imbalance. That's fine too. But point is that when we pop back up, you could see that bullish imbalance is an inversion at 50%. X marks the fucking spot. It's beautiful. Okay. Comes down. This is the opening range of the day. So from 9:30's high till 10 o'clock, that's the range. I have that in -1 right here. I'm aware of that. And then I ended up measuring this, but you can't see it right now. Point is that I have those all week gaps as well. So we come underneath here and we hit that imbalance. And then 10 o'clock, this is a 10 o'clock play. 10 o'clock comes in, gaps down right there, makes an imbalance, hits that imbalance, and then makes a new low. Then pushes all the way back up. This is 100% retracement. It's rare, but it happens, and it didn't change the bias or what was really going to happen to me. As you notice, I got the 20 the range right here to the weekly range on the fib on the side. I'm not using it yet. Okay, so what do I say in this here? I have these two green lines. The darker one is obviously the low, and then this second one is the little tweezer bottom, the bullish candle on the right. That's low. So you have a low here, and then which is the bearish candle. It's lower, and then you have the lighter green or the smaller green is the bullish candle. So this was my minimum target here. Look what I'm highlighting. Confluence target, 70 fib level. Fucking very clear. Higher time frame liquidity. That's the liquidity. Adjusted higher time frame projected -3.5 standard deviation. So at this point, I use the entire. If you're following the videos, I gave you this example of projecting this way. Initially, I had it like this. Okay, I don't think I put this in the video yesterday, but I've talked about it this week. And then I said there would be also a projection. This makes more sense because this is a low, this is an external high, and then we break clear. This was all lower highs. Caught that sell on Monday. Caught the sell on Tuesday. Bought it on Wednesday. Okay. Sold it on Thursday from here to here initially, and then from here to here, and then got that little guy right here, and then sold it down today here, and then bought it up into here, and I was done. That was my week right there. Very clear, but take a look. So now that you saw that projection, I'm going to make this video short because that it's a cleaner break and cleaner range to deal with. -3 is laying right there. Where's back to the confluence? Now that you saw that, the confluence, a higher time frame projected, -3.5. Then you have the -2 standard deviation in Asia, which is sitting right there in the bottom left, right there. And then the old week gap above, which is the one I'm talking right here. So I have all that. All right. And then I say, assuming target is rated, obviously I know it's going to rate, but doesn't mean I got to be a part of anything. It's already London. It's already a beautiful day and fuck off. What's it called? Plan after is to then reverse to 20 to 40% of the weekly range for the wick of the week to make the wick. Already at an 80 average daily range of 500 points over here in this area, right? So obviously I know it can go more. It went 600 points, right? Which is fine. Let me push pause and show here is the post from yesterday before the market opened. Not sure if I clarified with the weekly range fib and video. I was saying if Thursday was low, we could come back into the 20-40% range. I expect Friday to make the low of the week, then pull back in. Looks too heavy for Thursday to be a low. Also, this is manual intervention. Beautiful. Okay, great. Said that, right? So is this me planning is this me executing on the plan from yesterday? No problem, right? Very, very, very clear. So we come in and we use this, we tag it twice, 100% retracement, no bodies in the upper half and damn near in the bottom half. And then we pop up again, tag it, and then we break. And this is the bottom of that weekly gap, Then we come down, we come up. I got this there. We see this no wick on this candle, shoots down, they tag it real quick, right? And then this eventually starts to work. Notice that high doesn't get broken, and the original high of that imbalance is that high. So obviously, but look where my entry is. Just precision. And then coming down, you see this imbalance, and then you see me getting into this area and targeting it. Now, what happened since then? Before we go up, okay, we hit it, right? And again, for your notes, how I'm projecting these is this one on the left is the range of the opening range from 9:30 to 10 o'clock, high and low. Look where -1 is. Okay, cool. Then I measure this to this because that was the last move up. Then we broke down. Look where -1 is. Coupled with this. Wow. You don't say. Ooh, now I got the actual fucking fib sitting there, don't I? Yeah. You see that? That's the range of the week, right? Take a look. Oh, we break this liquidity. We get 3 drives. 1, 2, and 3. The third drive has 2 drives. The second drive has 2 drives, and the first drive has basically 2 drives. Okay, cool. Then what do we get? We get a shift above that swing, very clean break above. Okay. Oh, and what is this? Time. You have lunch, selling down into lunch, and then buying back up as a reversal for lunch, because in general speaking, this is now all liquidity. If you look to the left of your chart, where is it going to go up? Where do you think it's obviously going to go up to? Well, you have this breakout level right there. That's number 1. Number 2, the 20% is in that red right there, right? And then what's above that? All those equal perfect highs that I sold from. And if you didn't get that sell and you got it from here, there's your first imbalance. You don't think that we're going to come and grab that? Probably that was easy selling. I mean, this has been, at this point, it's becoming pretty easy. I'm not going to lie to you. And if you just don't fight it and just flow with the logic, just fire. It doesn't get fucking better than this. And what's it called? We break that low. I'm sorry, yeah, that swing high right there, and then we retrace back. I talk about it all the time. Well, yeah, it's dragging. You don't know. You give up. Fine, okay. Shifts above, clear displacement, retrace back, put a fib on it. You don't need to, but that would be maybe a 70 or under 61, whatever. Doesn't matter. What's the algorithmic level? Breaks that high clean, comes right back to the tick. Oh, you got that imbalance from 12, 13. Perfect. Then what? I got it measured here, going this way. This is the way I measured it this time. And then you can see the -1 is laying on the 20%. Is that mathematics in the background? Yes. Where's -1.5? Right there. Perfect. Notice I'm including the 0.5 as well. You can see the reaction coming right back into it. Look at the break here. This leg pops up. Look at where the high is made on that gap. On this gap, comes right back to what we haven't gaps in a while in the background because it's obviously all-time highs. Bounce right on top of it. Does this just look? Is this possibly random? No, all algorithmic. Oh, where does it go? Shoot straight to the 20%. This gap. Oh, and then the 930. Playing around in that first imbalance of today. Swept the 930 because obviously that was easy. And then you got these guys right here. These little motherfuckers right here. And your day's done. Don't even need to make the video any longer. That was just, I don't know what anybody else wants from me, bro. This is just as good as it gets. Do you see me capitalizing off it? Absolutely. And eventually, hopefully, I get into my swing of things where I stop doing all the extra stuff I'm doing. And then I'm going to get back into this, like pushing it with size and all that. But I don't need it. It's all good. I'm building Rome. I'm the pyramids. I'm not over here trying to. It's a marathon, not a sprint. But notice the logic is what matters here, dude. So ain't nothing else I could say. And then those bullish imbalances being used as inversions. Notice how this just sells right from that daily 50% right there. Just keeping it simple with this. Is there anything else I need to say here? Let me see here. Again, lower high, lower high, lower high. This is a leg down. This the real lower high. This is just happens to be internal. It's not a big deal. If you were gonna see bullish, it should have went straight up from here. Instead, it goes straight down. Once you know what side you're on, I mean, you could have been having that notion the whole time. Which is fine. But keeping it simple in the drawing that I kept like this. Hey, I still bought it all the way up to here. So anyways, just beautiful, man. Beautiful, nice reversal there. Expansion with expansion. And I mean, what the hell else is there to say? Dollar coming down a little bit now, pushing us up. What's it called here? Where's 930 we had Dow with a higher high here, and then it sank us down, and then I wasn't even paying attention anymore, but we had another higher high here. And then we had lower highs here, very clean there. And then with that equal high situation, we had with, let's just say S&P had the higher high, and then those were equal highs. So kept it simple. It's fine. But that bearish imbalance was in control in the 5-minute. And man, just beautiful. It's not random. Definitely not random. And then they took out their 22nd and 23rd lows as well today. Dow did. All right. Mention about that looking like a suspect. And again, the retracement still deeper, and we had Nvidia coming down also. So with majors. So just simple logic. Finally got to an over, almost sold there. Popped up. I'm not saying it's over with. I'm just saying this week is fucking over. So, and my expectations are definitely over. Look at this whack shit. So this is why I don't trade Dow. Because if I'm selling here and I want to hold, they popping up for this. It's like, dude, what's up? Shift right there, very simple. And this is what the things that you expect to see in the price action. Here's S&P. They came definitely lower, much lower actually. And fuck. And then they didn't take that guy out, so they stayed inside the wick here. So missed it by 50% a hair. Top quadrant in that wick. Do the research. Now coming up to wipe out these easy sellers, because so that example I was saying yesterday of these easy sellers, we would do that today, but this is where the price action ended up, and it's still fucking going up. But came right back in the range of the week, bro. Fire. And this is a 5-minute. You can see their gaps. Look at that, to the tick right there underneath it. Man, right back to their 50. We're not even nowhere near to 25 yet. But man, bro, just fire. I mean, you know what? This is crazy, man. And then Nvidia also. So I said about this gap, and then obviously they're just coming lower to really squeeze. You have these equal lows here. So do they pop up from here and stay bullish? Or do they want to come down in here? Are we headed for a change of market? Which obviously we had a super extended area. Plenty of liquidity here. But, if all the chips and all this AI is doing so well, there's no reason for the price to be down here. Matter of fact, the price would just be lingering up here. First of all, it wouldn't be coming back down like this. So what this tells you is that that's manual intervention. Why? Because too many people are eating, number one. Number two, gives them a chance to get more people involved. You got your average Joe trader now. Average Joe person is knowing about the market now. Like literally people who have no business knowing about the market. So it's like funny how, anyways, I don't know what else I can say here, but you guys fucking take care and God bless.